You are listening to Mining Stock Education.
This market is hard in terms of stock picking because everything goes up. So if you're just entering the game now and seeing what's happening, basically you can invest in anything and it'll go up and it'll have access to capital. But when the market turns, as we know, it usually does, you might not want to be holding that one, but you might not know the difference between that one and the other one. That's really the biggest danger for people that are investing, mostly in the juniors.
It's Mining Stock Education. I'm your host, Bill Power, speaking today with Joe Mazumdar, the expert from Exploration Insights. Joe, thanks for coming back on the show. You're a globetrotter. You were just down in South America, in Chile, and Argentina. You're back in Vancouver for a period of time. So thank you for coming on the show again.
Thanks a lot, Bill. Thanks for the invite.
Let's talk about your management of your own junior mining portfolio in this bull market. How have you been managing your portfolio, especially since gold's run up in the last 4 months since we last chatted?
Yeah, I mean, and probably more importantly, the equities have run up. So, they're providing that, plus 2 times leverage, which is what we're all looking for. So I would say in this market, the beta is really strong. If you just owned an ETF without having to, manage a portfolio or look at a bunch of stocks, you would have made, probably got 150% this year, year to date on the GDXJ. So then you got to look at like, how much better can I do than that? And for me, it's been the grassroots stuff where you can get the alpha because they actually hit good results. And in this environment, there's more people watching. And so you can get significant movements in share price. And then also with everything that's happening in the world, I mean, that's driving obviously up the gold price and silver as well. And then the fragmentation of the global supply chains and tariffs and all that have made some, probably more obscure commodities, bringing them more to the forefront, making some companies that sort of lie in the orphan period of the Lassonde curve much more attractive than they would have been because of other sources of financing rather than just always going to the market. And when the market sees that, they say, wow, they might not have to raise significant amount of equity. They might get funded by other things. And so this is a good time to come in. I don't have to wait for them to raise equity because in the end, they might not raise a significant amount. And that might not be an overhang. And so there's a lot of different dynamics in this, if you want to call this a cycle, compared to others.
When you're investing in those earlier stage projects, is that post-discovery hole or pre-discovery hole?
Well, some of them have been like this one in Kazakhstan, copper and gold, had been definitely pre. I went and saw it. It had a run up prior, but as we've seen, those run ups are like it's very small compared to what's happened since then in terms of the market. And most of its run up in share price has been more alpha related in terms of them drilling. But it's drilling, getting results and widely spaced holes, not drilling the same hole over and over again, but, kilometers away on big trends. And then when you look at that, that's just one land package that they wholly own and then got another big land package that they haven't yet tested that's wholly theirs. But they also have a joint venture with a major like Teck on other ground that's sort of sitting there as other news flow, but that's not news flow that we're dependent on. And in this market, if you do everything right, the cost of capital is much cheaper for management teams and companies going forward in terms of being able to raise significant amount of capital on the market, on the equity markets.
Can you comment on that? Because my jaw has dropped in the last few weeks when I've seen some of these raises, hundreds of millions of dollars. Yeah. What is your commentary on that occurring right now and also on life financings? How do you think that the life financings in which there's no hold in Canada on the stock once it's issues, how will that affect this cycle relative to past cycles?
Yeah. So in terms of the first one, in terms of the equity market, this sort of market, is hard in terms of stock picking because everything goes up. And so if you had this checklist of things to look at and it goes, oh, they have access to capital and all this other stuff, everyone has access to capital. And so everybody's raising. So it's very hard to know, when the market does turn, do I keep this one? Or is this one the same as that one? Especially if you're non-technical and don't have a lot of, breadth in the industry or haven't been doing this for a while. So that is difficult. So if you're just entering the game now and seeing what's happening, basically you can invest in anything and it'll go up and it'll have access to capital. But when the market turns, as we know, it usually does, you might not want to be holding that one, but you might not know the difference between that one and the other one. That's really the biggest danger for people that are investing, mostly in the juniors, but also in the producing companies, because there is a tendency for the more marginal plays to go up even more because, the percentage increase in cash flow, and that could be, infinite because they never made money before. That would be one of the risks. And in terms of the life financing, I think it's a good thing to get rid of the 4-month hold because, for me, the private placements, the 4-month hold is my reluctance to actually do it because I'm not interested in the warrant because I would prefer companies that could manage to raise money without offering a warrant, which suggests in terms of supply and demand, they don't have to offer that. The best thing would be a small discount to market. And if it's a premium to market with no warrants issued, that would be, your nirvana for financing. But still in this market, we're still seeing, because this is the market for brokerage firms and banks, and they will offer people money like Post the Gold shows, because I had a company that, silver company, and I thought, well, you got more enough money because you just raised a bunch of money in January, and then they raised a bunch more money. And then I looked at it, but I mean, I can't really complain because they're raising at about 170%. The price was 170% higher than the price they raised that last time. So that's probably a good timing in terms of raising it. And it was a bought deal, no warrants issued, and not much of a discount to market. But now, they're cashed up, and then now they can do more things because they're one of these companies that are advanced and sort of in the development period. And so having more money is obviously, a good thing because you don't know when the market's going to turn. So yeah, I would say with the life stuff, the attraction of doing ASX listed companies is that, if you buy the private placement, it's free trading right after. And so that will make doing Canadian financing more similar. And if we do this with flow through, that's the other problem is like with the flow through, it should be charity flow through and not just straight flow through because those people will obviously sell right away. But now with the charity flow through and a strategic or somebody coming in and taking the backside such that you don't have this overhang, I think that's a big positive for the Canadian market as well. And that way, the regular sort of thing is like, okay, wait 4 months, you raised at a premium to market, but everybody knows what you really raised at. And then in 4 months, you're going to have your share price fall by basically everybody selling that bought it. So they're just waiting for that. And if you're tied up in that same financing, you've got to wait as well. And, as soon as you start trading, everybody else is, and you're just trying to sell it at the same time. So I think the life is a good thing. And we got to do more such that the people that are buying into these companies are buying it for the right reasons because capital should be constrained. The capital should go to the best companies. And we shouldn't complain 5 or 10 years later that, oh, look at all this misallocation of capital. Well, here's the reason. Because people aren't buying for the right reasons. They're not buying the right management teams. They're not buying the right jurisdictions, or they're not the right assets. Everything's gone up. Everyone's getting money. And then, 3 or 4 years later, all that money that we gave to these guys has gone to zero. And then we go, whoa, geez, what happened there? So if we structure the financings better, That'll make it harder for these bankers, these investment bankers, to sell the deals, because those guys that just want the warrants and things like that, it might be harder to do. And so anything that constricts capital and has it filtered more to the better companies, I'm all for.
What about the warrants that are issued with the private placements? You don't want to see a warrant issued because you want the project and the management team to be of such quality that people want to put their money there. However, there are some projects that won't get money unless there's a warrant. That's the flip side of it. Yeah. Some people think that the Canadian markets are destroyed because of the warrant overhang, as we call it, to where people will just sell the stock and keep the warrant and ride that out. And then it puts such an overhang on.
Yeah.
What's your take there, Joe?
People profess that. That's their trading strategy, is to hold on to the warrant, wait for the share price to go up, trade it right then, get a zero on that, and ride the warrant for free. That is a strategy. I mean, Exploration Insights is not a trading forum. So if I did something like that, I would do that personally. I would not do that in the letter. Because the companies we hold, the intention is to hold them for a while. Unless I make something specific and say, okay, these guys, this happened, this is going to happen, and I'm only in this for 3 months because of this. But that'd be a trading thing where trades are possible and it's liquid enough. I don't want to trap people in a liquid company. And so for me, the warrants, the type of financing a company does is reading the tea leaves in terms of understanding the management team, jurisdiction, the risks, because they would have to have offered a lot of this because of certain things. And you have to be comfortable with those risks. So if you think it's all jurisdiction and that's why they had to issue the warrants, and you're comfortable with that jurisdiction, that's fine. But if it's, management doesn't know what they're doing and they're just trying to get the money, because they're running out, and they have this program and they have to fit it into a field season, maybe you're not so okay with that. It's just a risk you got to look at and understand if you're okay with it. There's nothing wrong with risk, because that's how you make money, is taking risk on, but you just got to make sure that you understand that risk.
A big winner that you had in your portfolio was Lundin Gold, the producer, high-grade producer in Ecuador. You shared that on this show probably about a year ago, and it's up, I don't know, 6, 7, 8 times since you shared it. So congratulations on that win. Are you still in it?
I never owned it.
You did? Yeah, you saw it, but didn't buy it.
Just giving you guys this stuff for free. But I mean, because in Exploration Insights, we're not about those kind of companies. But we like to understand what these kind of companies are doing. So every 6 months, I do a breakdown of all the precious metals companies. And I think you caught me after I did one of those, and then Lundin Gold stood out. Why did it stand out? Is that it was a completely different market in terms of the gold price, but it stood out because it had a high margin. It stood out because it was very well managed. It had access to capital. And because it was in a, let's say, not a great jurisdiction, meaning Ecuador, they issued a lot of dividends. And so their shareholder return just on dividends was they were giving back 60 to 70% of their free cash flow back to shareholders. And so when you start doing that, you start discounting that cash a lot different, because now you're discounting a dividend. You're not discounting free cash flow from an Ecuadorian asset anymore. And so the mindset gets a bit different. It goes, wow, this is a great company, because not only are they making their money, they're giving it back to their shareholders. And so that would attract new shareholders. That would attract people that are attracted to dividends or something like that. And this is single asset, gold mostly, and in Ecuador. But what are the differences? Backed by the Lundin Group, so always have access to capital. They tend to have really high-end management teams. They've always executed very well. And that execution and meeting guidance and things like that collects a premium eventually, even, that could offset the discount for being in Ecuador, which I don't think they have anymore. They certainly haven't had that for the last 2 years.
Would you buy an early stage company in Ecuador?
No. I'm jurisdictionally, like with grassroots exploration, let's say, you're taking a geology risk, you're taking a financing risk. Do they have access to capital? Permitting risk, and there's a lot of other risks that you're taking. So in terms of jurisdiction, there is that frame of mind, the thought process that goes, because there's less capital being spent, you could take a risk on the jurisdiction. But, I'm not going to take that and go into a company in Mali. I'm not going to take that and go to grassroots exploration in Burkina Faso, because there's so many other things that could happen there that, could have a big impact on the stock. And not necessarily the company, but some other thing like, oh, we have a coup, or hey, like in Ecuador, they were having infrastructure issues with power. They were having the problem with the cartels and things like that. That sort of stuff, just makes it harder to operate in some of these areas. And this is a company that would require money, and now they're, have to spend more money for safety or security or whatever. So I'm more interested in going to places like I did the last couple of weeks into Argentina and Chile. I could drive where I want to drive, get through on the border. They're spending money. The problem there is, spending money at higher altitude where, you're spending, almost $1 million on a hole, as you're drilling over 5,000 meters, above sea level. That's the risk you take, a different risk. But you just have to understand which risks you're taking.
How are you playing the critical metals trend? Here in the States, the Department of the War Fund buys 10% of Trilogy, one of your past picks. Yeah. And then that thing goes ballistic. There's other companies, Nova Minerals, Guardian Metals. When the DOW, now it used to be the DOD, invests in these companies for tungsten or antimony. Like it just sends the trajectory hyperbolic.
And I don't get it. I don't get like especially Trilogy, that financing, and with those very inexpensive warrants. The actual event was them saying that, oh, we're going to help you permit it, we're going to help you fund it, we're going to help you do all this other stuff. And I think that rolled into I think that I don't know, the amount of shares they traded that day, but they added over $700 million in market cap overnight, just that day. So that was just ridiculous. We've seen what's happened to Perpetua shares with, I think that's the X-Min guy, Export-Import Bank that had the letter of intent with them, to raise funds. And that's been more of a progressive sort of increase, and this is lending them, I want to say about 70 to 80% of the upfront capital for potentially 10 to 15% of the life of mine institute revenue on the antimony side. I mean, they weren't giving it to them because of the gold; they were giving it to them for the antimony. So we're going to see a lot of this because the Department of War, Department of Defense has a lot of money. And it's easy for them to reallocate money that's already been appropriated by that department. And they obviously need the antimony. They obviously need the rare earths. They need all these. And what's changed from critical, it's changed to security minerals. That's what they're willing to spend a lot of money on. I think they're going to spend less on things like lithium and that to drive electric vehicles and that, but they will spend money on copper because that's infrastructure for everything. But these niche markets like rare earths, I've done very well on a rare earth company with assets in Brazil and Chile. But then you have to understand the market. It's not just about mining. It's mostly about processing. So you have to understand the management team has a way of, getting this stuff to market and actually processing it. And do they have the right people there to be able to take advantage of what's happening right now in the market? The cost of capital for these things in the Lassonde curve that are in the orphan period suddenly go down if they can feed into the domestic U.S. market. If they can do that and it's the right metal. I mean, I think I just saw something on my phone saying that, Australia and the U.S. just signed a critical mineral agreement That's probably around rare earths and things like that. And you remember and this is not just a Trump U.S. administration. This is the Biden administration as well. They were trying to get a big deal with Vietnam to get access to their rare earths, because a lot of the projects they have this, not as big of reserves as China, but they have decent reserves. I think about the same as Brazil, in the same types of deposits that are called ionic absorption clay deposits. Easy to mine, free digging. But the processing is the important part. But Vietnam doesn't have a developed sector. But Biden wanted to do a deal with them to get access to it, which the Vietnamese wouldn't do. So people are, scouring the world for all of this. And you saw what happened with the U.S. administration looking at places like Greenland, and also for God knows what reason, the Ukraine as well, for rare earths. And so it's happening on a global scale. That's for sure.
Is it lithium's time for a bull run again?
So lithium is interesting. Lithium is interesting because there's a lot of lithium deposits out there. It needs a much higher price for a lot of the spodumene to work, and it might come back in terms of that. But that's suggesting that, you're running out of brine, which is lower cost. And then they have, the brines that are off of some of these oil fields, very low grade lithium, but they're sitting there. And so that would be, for me, the lithium issue is on the demand and on the supply side, and the technological changes that can happen. On the demand side is a change of the battery from lithium to sodium to solid state, or other batteries that don't use lithium or diminish the demand for lithium. That would have a negative impact on lithium price. Lithium carbonate equivalent price. And then on the supply side is that if we can make a lot of these other technologies work on lower grade deposits, then suddenly we might have an oversupply of lithium. And you would probably, because some of these lithium mines, especially the hard rock and even the salars, they last 10, 20 years. Can they actually live through one of these high amplitude cycles that's happening? This one's been a lot more depressed and for longer. But as you said, the lithium stocks, at least the LIT, has had a bit of a pop. Not performed as well as gold or the XBM, but it's done well.
You used to work for Newmont. You mentioned that, and the Newmont and Barrick CEOs resign on the same day. I believe it was the September 29th. What do you make of that? That seems coordinated.
It does, but I doubt if it was. Because I would say that the Newmont one was well telegraphed, because Palmer wasn't going to the gold shows anymore. There was somebody else presenting. And so they had a transition, and they were working through that transition. And so it made sense for them, post the last gold show and have the heir apparent present that they just, okay, we're moving on now. What are we waiting for? So that probably made sense. The Barrick one was weird, in that he'd still been out there presenting, and he was also talking about, Rico Dick bringing that on. He was talking about 4 Mile, which is now into a scoping study. And all these other deposits and things like that. And then suddenly, he's gone. So I don't think we saw that coming. Nobody did. And I don't think it was well telegraphed, because nobody saw that coming, internally or externally. So I think something else happened there, and there's a lot of speculation. Was it related to what was happening in Mali? Was it related to something else? Because, as CEOs, they tend to, especially big companies, into, it's my way or the highway. And there probably was an instance where he sort of wanted one thing to happen and the board was against him. And he said, you know what? I don't need this anymore. I'm walking. So, I could see that happening very easily, because he doesn't need the money. And he could go out and do something else, without having, the board. And I always wondered, with respect to Randgold, how he ran that, how he would run Newmont, as long as he had that flexibility to do exactly what he wanted. I'm sure he would run it. Once he lost that flexibility, that he would think like, wow, what's the point? So I think that's probably what happened. But I'm, again, purely speculating.
NGX Minerals in South America, one of the Lundin Group companies, their discoveries, they're spinning out a royalty company, like we saw Great Bear and others do this. Is this a new trend we should watch out for? What's your thoughts on this?
It makes sense because of the valuation of royalties, because as we've seen with some companies, like the one that I had that did very well, Origin Royalties, before they're even cash flowing can have a very high value. So if you've got a royalty on, like this Arthur Gold project that AngloGold Ashanti CEO, I think it's Calderon, said during the Gold Forum that by 2030, 35 is going to be a third of their valuation. And you have it now, the value is coming now, in terms of present value. And so that's something they can hang on. And then as they do this and spin out royalties on other Lundin projects, they can create their own portfolio of a new royalty company. On their own assets. So I do think that makes sense to do, especially if you don't burden it, because the problem is BHP probably doesn't like that. Spinning out royalties on assets that they want to develop, because then they have to change cutoff grades and do different things because now that there's an NSR on the project, and I'm not sure how it impacts the BHP side.
Do you think they would clear it with them first?
Absolutely. I would think, because it is a joint venture. I'm not sure what the royalties on. I haven't read in terms of the area of interest, or is it just precious metals, or is it just base metals, or is it everything? I don't know. Because there will be royalties, provincial royalties, and I don't know what other underlying royalties are on there right now. But yeah, it's a big project, and that kind of a royalty that would have a potentially multi-decade life would be something any royalty company would be interested in. I think it's definitely a good move.
Final question. How are you using artificial intelligence in your junior mining stock due diligence?
Well, Bill, this isn't me talking. Just so you know. No, I would say, like, what we're using it for, not always. I mean, we have been using it for, let's say, 3 years on going through the letter and making sure about spelling mistakes and grammar and stuff like that. That's a form of artificial intelligence. Now I'm using it to get comp databases together. So when I'm looking at a certain project and I say, oh, you know what? This is an open pit copper project. Be interesting to know what the grades are for open pit copper development projects, and then start building out a database and asking questions. My problem with, using some of these formats like ChatGPT and that, I still question the answers. So I'll get an answer, then I'm not going to take that as the truth. But it'll lead me to look at that data and say, okay, is this right? What else is happening here? What don't I understand? But it'll give me that download of information that I used to have to cobble together. It would take a lot longer. That's definitely there. But then when I really put the data together and I graph it or I do something with it, then it's me going out and getting it. But now I'm starting to look at, using AI and that on technical reports and putting together a bunch of technical reports and getting out the data I want from them. And so that's another thing that I'm looking at doing. But I've talked to a few people about it, and it can get complicated. But what I'm trying to do is just make what I do faster. And that's what makes, what we do a lot easier, is that we don't need these big teams running, all these sort of models or anything. We could do a lot of it ourselves, and AI just helps us leverage that. But we have to, take the little risk factor that, sometimes it would have a moment that it will go off on a tangent and not give you the results you want. But if you take those results as the truth and then present it to people, then that's you doing it, because you didn't verify it. And it's very important to verify the data still. But it is kind of scary when you use it a lot. It starts asking you questions about, do you want it reflected in this format and do it like this? And you're sort of like, no, hang on, buddy. No. Stop. So yeah, it can get scary when it starts asking you questions.
Do you use it for investor sentiment to get a gauge on a certain stock or an industry? Because there's companies like StockTwits forum for investors to where they actually sell, their sentiment indicators because it gives people a grasp of what investors are thinking about their company.
Yeah, I mean, it might be a good thing, but I mean, I do this for a living, and so I've got a pretty good grasp, I hope, of what sentiment is and why something's doing what it is, because I track it weekly. But for people that don't, and they find value in it, go for it. Any edge is good, but just know that, sentiment is a very, a lagging feature. When will it turn? Why will it turn? Are probably better questions, than finding out that, this is what it's been doing for the last 6 months. Is it going to keep going? And usually when we find out sentiment's turned, it's already sold off.
Excellent. Well, Joe's website again is explorationinsights.com. You can go there to check out Joe's service. And he also has some educational writings on that website as well. Joe, as always, appreciate your insights. You offer a unique, genuine perspective. So thank you for coming on the show again today.
Great. Thanks a lot, Bill.